Hello everybody, welcome to another video here on my channel. This is episode 5 of my Chart Annotations Review. This is the last episode of this week because this is Friday, and then episode 6 will start with Monday of next week. So that's sort of how it's going to play out. Each episode is going to be correlated with a day. So if you haven't already, feel free to look at my first episode. You can join my Discord. It's currently free. You can get like a free subscription to see how you like it. And there's going to be a lot more to the Discord starting Monday of next week, which would be the 25th, 26th, 26th, which would be the 27th, I believe. I don't know. The 27th of May. So, first of all, going into Friday, we can see we just took out an external buy side. If we look at the daily open of the previous day, which is right here, we started with trading below it, now we're trading above it. I could expect, since we are above it, and if we look at these sessions, so Asia session was just right around it. Daily open was at 6 p.m. the previous day. That's how it always is. London is trading above it. So most likely I can expect us to end up closing below the daily open. Since we traded above the daily open during pre-market or during the midnight session and all that stuff, I can expect us to end the day off around 4 p.m. being under this daily open. So right here, this is 5 a.m. So let's see what price is going to do here. It's on 10 times speed for now. Okay, so again, we took this buy side. We're in an uptrend going into this macro, it looks like. So first of all, we have SMT created right here. And then additionally, we have another SMT right here. You could also count this as a manipulation leg. The reason why is because it's strung up closed candles that sort of manipulate a price, because we already had an SMT. We already had an SMT right here, right? But we came back up one more time. So this is manipulating this high right here. So these are possible standard deviation projections. Now macro hits, we're in an uptrend. I want to see us displace below these 3 equal lows right here. So I want to see some sort of market structure shift below these lows. We have 4 equal lows now. There we go. There's the market structure shift. Now remember, this high, this protected high, should not get taken until this SMT TP gets taken. So we can use that. If we look at this, wait for this candle close, you can see we're respecting this 1 minute. This could probably be a possible entry. To go lower. So this would be entry. Your stop could be at this candle's high. So see if this trade would be successful. It would. Beautiful, right there. You'd have this probably would be a little bit higher of a stop. No one, okay, 4.25 point stop for a 8.25 win. So that move's complete. Letting more structure build. We create an SMT right here, right? And protected low is going to be right here. We go straight up to this SMT TP. Now we did have displacement up followed by a gap, so this could be pretty bullish. But we also have a 15-minute and a 5-minute and a 1-minute all stacked right here. This 1 minute also has gotten previously respected, so we could see us sort of slow down entering into this. So you can see we hit off of it. We actually tapped into this 1 minute for this SMT. Came back down, took out this protected low. Again, this protected can get taken because this SMT TP got taken. Build more structure. Right here, we create another SMT. This would be a protected high. Right after the SMT is created, massive displacement down, we take out this SMT TP. So now we're into this 1 hour fair value gap, so I could expect us to go higher. After we hit this 1 minute or this 1 hour fair value gap, you could see we get a little bit of displacement up. We tap a 1 minute to go higher, tap another 1 minute. Going lower here. Okay, so now, once again, we're entering a macro. This is 7:50 to 8:10 a.m. macro. Look at this, we're in a downtrend. What's going to happen with this macro? We're probably going to reverse to go higher. We also have another macro right here. So you could sort of think of this as just two macros close together that can possibly reverse this move right here. So I'd be waiting for market structure shift to the upside. So I want this high to get broken and closed above. It does that right there. So now I'd just be waiting for a retrace to get respected. So first we have a 1 minute right here. This could possibly work. This could be an entry. You could put your stop at, let's say we put it this low. How much of a stop would that be? This would just be a 1.25 point stop. This would be really short. So what you could do, honestly, since this stop is so small, if you have room, you could probably put it at this candle's low, just because there is a 1 minute right here that we could tap into. So how much would this be? This would still be only 4.25. So you could honestly, you could put your stop at here if you wanted to. It's all up to you as a trader. Right here though, it does look like we disrespect this 1 minute. We're actually heading down a bit, and we tap here. You would probably get stopped on this, but that's fine because you can get a second entry. After you see this SMT, this is a little more bullish because now this low is protected. After we get this displacement up, our target's this SMT TP. Our final TP would be this high. We respect this 1 minute and we head higher to this SMT TP. We're rebalancing here into this, we have this gap right here. We actually had a little lower to this previously respected 1 minute. Come on, dude. Okay. So there's this 1 minute that's previously respected. We tap it again, and then we come up to take this TP. So actually not too clean around here. I probably would get stopped if I was taking trades in here. So we come all the way up. Do we take out this protected high? Yep, we take out this previously protected high of this SMT. And then we form another SMT up here. Now that we form this SMT up here, this protected low down here would be the SMT TP. So right here, I would expect us to, if we get a little bit of displacement down, right, like this, I would expect us, especially since this is 830, this will kind of show you where the draw is going to be if you correlate it with an SMT, if you correlate it with a draw of liquidity. So now I do, from this candle right here, I expect this to go all the way down to this protected low, without a doubt. And this is exactly what happens, beautifully. We also create another little small internal SMT right here. And another thing is that, as you can see, there's really no entry in here because we didn't tap a 1 minute. But this SMT on ES, it technically did tap the 1 minute, right? But NQ didn't. But only one of them has to tap the 1 minute. So now we took this up. We took out this protected low. Looking at a higher time frame, we're probably going to want to reach into discount before doing anything else, before making any buy setups. So we tap discount right here. We tap it again. we're just in a downtrend, right? Now we're in an uptrend. So going into this macro, we're in an uptrend right here. So we could possibly see it reverse to the downside. But of course I want to see a previous low get traded below. So you have another low right here. We're still just trading higher. Right here, we reverse this. We still reverse it in the macro. It's kind of just one candle. This is market open. I don't really like trading this macro again, just like I said previous episodes, because we're usually slow like this before market open, and then market open will put us in the direction. But usually you'll notice market open, you can kind of predict where market open is going to go. If we're in an uptrend right here before this macro, market open most likely will dump us. So now if this fractal right here, we're in 50%, could expect to see some sort of move higher. Usually also with market open is that this candle right here will be manipulation as well. So we sold off in market open, tapped this 5-minute, buy back up. This leg right here would be a great manipulation leg. You could see some targets is this 2.5 and this 3.5 to 4. So we tap the 2.5. We take out both of these previously protected highs. And now we tapped this. After we tapped it, rebalanced to 1 to 1.5. We may tap discount of this range, or we'll head higher. So right here, we tap this this 1 minute, and we headed higher to this 3.5 to 4. So that'll be the end of this move. Again, we do have buy side up here from very, very previously long ago, but it still has it is yet to get hit yet. So now, uptrend. We're going into this macro, 950 to 1010. I would expect this to reverse us and possibly head lower. Again, uptrend into this macro, reversal up here. See if any lows get displaced through. So you have a low right here. I want to see this close below it, just like this. So now, my entry would be in this 1 minute for value gap. And my stop would be at the top of this candle. This would be about a 15-point move, 16-point move. Retrade back into it. This would be your entry. And my target would probably be, well, we have this manipulation leg right here. I don't know if I'd really call this manipulation. It's just something you can draw out. But I would want to see us head down to this low right here. So this could be a TP. So tap that entry. We'll form a little SMT up here. Now we dump. Take out this TP. Take out the sell side. We have a couple other sell sides right here that might want to get taken out. Both these sell sides get taken out. Finally, we got this sell side. Sort of just generating more structure here. Have another SMT formed up here. This could be another little small entry just because we tap this 15-minute, right? Reject off of it, come back up, retap the 15-minute, create an SMT, displacement down after the SMT. Here's a 1 minute for value gap. This could be a little turtle soup entry. We come back up, enter into here. Stop would be at the top of this candle, which would be a small stop. This would only be like 4 points. You could also put your stop up here if you'd want to do that. So here's this entry. And we come up again to retest this 1 minute. We create another SMT. So you could sort of see we have an uptrend going into here, right? Now we have a sell model. With this uptrend, we have a sell model right here. Beautiful sell model. And we have a macro. So this is very, very bearish. So I do expect us to sell off. And we sell off beautifully to take out these lows and also finish the standard deviation projection if you're to mark this out as manipulation. So now let's see what happens next. We're going to wait for more structure to form. All right, so we just bought back up here. We just have the discount of this leg. Again, waiting for some more structure. So now we have a little bit more. We create an SMT up here. After we get displacement down like this, we take out this low, right? This would right here be protected high. This would be SMT TP. I want to see us retrace to a fair value gap now. A little bit more displacement down. We also have this liquidity gap. This right here could be an entry. We tap into the liquidity gap in 1 minute. Now I could expect us to sell off to this SMT TP. This would be a beautiful sell. Awesome. So now we create an SMT right here. I want to see it's kind of, we also wick up. So this is most likely going to be in play. This protected high would be your SMT TP for this SMT. And then down here would be your protected low. I want to see us displace up. There's our displacement up. We have a 1 minute here. Doesn't look like we tap it. We have equal lows here. So right here, we just swept these equal lows. Let's see what happens here. So we tap into this 1 minute again. We end up going down to here. Now we have 3 equal highs at this buy side, so I do expect this to get taken out soon. We may want to rebalance into this 1 minute before taking it. Maybe not, we'll just take it right away. So this would be a little bit more of a tricky play. You can also see as well, we're at an uptrend going into this macro. Then we end up selling off, right? Sort of a more tricky macro. We take out these 2 highs. We also tap this 1 hour for value gap to the tick. Now we're into this 1 minute for value gap. We tap it twice. We're also in discount of this range right here. Could possibly see higher. And there we go. We see higher. We take out this protected high. So right here I'd be looking for some sort of possible shorts, maybe. Maybe not. We'll see though. So right here we create an SMT. This would be manipulation leg because we just took out an external high right here. After that, we came back up, took this internal high. This would be your manipulation. And we have formed an SMT. So now I would want to see displacement down, just like this. Here's a 1 minute for value gap. If we tapped into this, I would take an entry. So we don't quite tap into it. But we do end up selling off. Here's your standard deviation projections. You have 2.5 right here. Let's see if this gets hit. That gets hit. And now you can also see we're having a downtrend into this macro. This is the 1 p.m. to 1:40 p.m. macro. So we'll see if we get a reversal here. Again, this would not reverse us. This would not make us go higher because we did not close above this previous high. We just wicked it. We create an SMT at this high right here. This would be protected high. This would be SMT TP. Take that out. We retap into this 1 minute that's gotten tapped into multiple times. But you can kind of see in this macro right here, we're sort of just consolidating. We end up taking this protected high. So this is just a little bit of internal action right here inside of this consolidation. We have equal lows down here. So I would ideally like to see this get hit, which it does. We also end up taking out this sell side liquidity. And then we create an SMT over here. So this is a massive SMT. Up here at this protected high would be our SMT TP. You also have displacement up. If we were to create a 1 minute here, I would look to take in this 1 minute, but it looks like we're just so bullish here. We're probably going to buy quite a bit. So there we go. Massive buy right there. After the standard deviation finishes and form this SMT, what happens? We instantly buy back up. We take out this protected high. Right here we rebalance. This right here, this would be discount of the range. We don't quite tap discount, and then we take out this protected high. So now this model is complete. I'm going to want to see a lot of more structure now. We create equal highs up here. We sell off into discount of this range. We're buying back up. All right, now right here we have our final macro of the day. We're in an uptrend. Sort of. This is a little more confusing because we're in a downtrend going into this, but overall we're in an uptrend. Looks like we take this high right here. You know, we're just sort of slow. We form an SMT up here. This would be protected high. This would be SMT TP. So this SMT TP should get hit. It gets hit right there. We also have this 1 minute that's got previously respected, so we'll see respected again. We create this SMT. You can see we don't even close below this 1 minute. This would be very bullish to then take out this protected high. Right here, we come up, take the protected high, and you still have a little more time of the day. Most likely, I'd want to see this protected low get taken. If we still have a little more volatility, just like this, if we still have volatility after this protected high gets taken, I do expect this protected low to get taken at some point. So we'll see. And right there we go, it gets taken. Once again, you can see right here, the time and price of the day didn't really work out as much. You can see we traded above it, right? Actually, yeah, we traded above it just like this, but we ended the day still above it. That could still happen, but you can also see that we did end the day sort of lower than way up here. But yeah, this is all of this, and this is really all I have for this 5th episode. Again, starting with episode 6, every single week that I do this, I am going to keep adding more and more on to sort of understand price better. And I actually took off all 5 days this week to just study price. And I haven't traded anything because I want to sort of solidify my edge and get a lot better at trading the concepts before I actually start trading again, because my profit margins will be a lot higher. I'll most likely win more trades, and that is how you make money, right? You don't make money just trading over and over. I mean, you can, right? But if you're just trading more and more and you're blowing accounts and you're losing money, you need to actually be able to just study the charts without making any money. This is going to make you this is going to train your brain to, in a way, see all these repetitive patterns, right? And it's not going to be stressful. You're actually going to be able to take a lot out of it because you're not thinking about making money. You're not thinking about stressing about your trades. You're actually just seeing price action itself and looking at how it's been. It's also going to cause you to be a little more disciplined to study the charts better. If you just take a couple hours, like if you just take like an hour or two of every single day to just chart previous day action, which is studying. That is what studying is for trading. That and watching videos and getting educated on what you're doing, it's really going to help you in the long run. So that's really all I have for this video. I hope you all enjoyed, and I'll see you guys in the next one.